The market pushes higher as expected. Is it a real bull or a bull trap? This is Invest with Jacob. Okay, guys, so in yesterday's video, we talked about the fact that we were looking for the market to resume its push upward in that B wave towards 43.15, and that's exactly what we saw. The market pushed higher over Monday's high toward the 42.90 area before pulling back a little bit toward the close. Now the question is this a real bull or a bull trap? I'll get into that in just 1 second, but first, if you're new here, welcome to the show, guys. My name is Jacob Gabbard, and this is Invest with Jacob, where we use Elliott Wave Theory to break down the SP 500 and the NASDAQ. I highly encourage you to hit that subscribe button down below, so that you can get our daily S&P updates, our trade setups, and our buy alerts. All right, guys, before I jump into the charts, a couple of notes. First, we had 5 trades yesterday, 3 winners and 2 losers, but we made money on the day again. This room is a family, a community of traders. It's not just a trading room where somebody throws out trades and good luck to you. We walk through the trades with you. We show you how to trade. We teach you about the market. And everybody in the room cares about everyone else's success. If you'd like to be part of this team, I have an awesome coupon code later in the video, so stay tuned for that. For now, let's jump into the chart and take a look. Okay, guys, so here we are on the 2-hour futures chart for the S&P 500, and if you've been following along, we've been talking about how this move down is a diagonal off of the top. And so coming off of wave 3, we have a wave 4 up, and remember, diagonals are 3-wave structures for all 5 waves. That can sound confusing, but all that means is instead of wave 1 being 5 waves, it is 3 waves. Same thing goes for 3 and 5. So when you see me counting ABCs here, that's why. So off of this move up in wave 4, we would count this as A of 5, and then we're trying to complete this B wave of 5 up toward 43.15. Then we look for the C wave down toward the 40.96 area. So that's kind of the overview of what we're looking at. Again, wave 3 ended back here around 42.50 or so. Wave 4 up, and then you get an ABC down for 5 into the 40.97 area. Now remember, after diagonals complete, we do see strong rallies and or sell-offs depending on which way we're going. In this case, it would be a rally. You see counter moves that are very strong after diagonals, and I would suspect we see one here toward the 4,400 region. So once we get down into this 40.96 area, we should be looking for a pretty strong reversal back up toward the 4,400 area. Now, to dig down just a little bit and talk about what happened intraday as well as what we're expecting here, there are a couple different things we can look at. First, the primary count, the count that we expect, is that this is an A, B, and we're working on C up toward the actual target is 43.05 for the 1.0, but 43.15 makes a lot more sense for several reasons. One, you have this resistance band here that it should come up and test. 2, it makes more sense for this 40.96 area to the downside. So I do think we'll push through the 1.0 towards 43.15 at least, and then start down from there in that C wave. I wouldn't be trying to short exactly at 43.14. You're trying to catch tops and bottoms is really hard, and if the bulls try to squeeze here, it can get ugly to the upside. So give yourself a chance to let this come down and start to set. And once you get a 1-2 setup, you can then short there with the top being your stop. So just a little quick trading tip for you before you try to catch tops and bottoms, because it's really hard to do for any trader at any time. So for the bulls, do we have any hope? Well, yes. We could potentially call this a wave 1. As I said in yesterday's video, I don't really like it. It's not something that I'm putting a whole lot of faith in, but if it's a wave 1, then you have a wave 2 down. You have a wave 1 as a leading diagonal up, a wave 2 down, and this is a good example right here of a diagonal that sold off right back to its origination point. If that's the case, this would be a wave 2 down. And now what you'd look for is the bulls to break out over 42.90. So they came up and tagged 42.90 right after the close and started to pull back. No big deal there. They need to break out over 42.90, and once they hit 43.05, they must hold 42.80 and complete a 5-wave move up. So generally what that would look like is they should push up to more towards the 43.21 area. We would expect that anyway, because I said 43.15 would be the ideal target. Then you should see a pullback from there, and that pullback will kind of tell the story. If they start to come down quickly and break this 42.80 area, then that would be an area that or that would tell us that the impulsive move is failing, and we're likely to see this wave 5 down towards 40.96. If they come down and hold, then come back up towards the 43.50 area, and then back down one more time, and then up towards 43.73 plus. Okay, this would be a very good start for the bulls and would put the bears on alert that the bulls are trying to make something off of the low here in order to push higher and try to break out over this high, which would tell me that the bottom is in. So remember, when I was talking about the bottom, I said I want to see them break this high to confirm that the bottom is in. They came up and tested it and failed, and we made a new low. So this high right here, it's about 44.30. This will be the high they need to break to kind of get out of this cycle to the downside to tell us that the bottom is in. So that would be what you're looking at if you're bullish. I do not have a lot of faith in that. There's a lot of concessions being made. One being that this is a wave one up. I don't like the structure. Another one being that this is a leading diagonal. We don't trust diagonals. It's just not overall something that I would be super happy about until the bulls absolutely prove it. There is one other path for the bears, and that is that this is wave 3 of 3 down. This would be a wave 4. Okay, so we'd already be in wave C, 4 of 3. Then you'd get a 5 of 3, another wave 4, and then a 5 down like this, which would count better with the NASDAQ. But the NASDAQ does have some issues of its own, as we'll see on that chart. So this would be another alternate bear count. If they did top today by making this little bit of a high, they are at about the 382 retrace of where a wave 4 should be. So this could be a wave 4 as well. We would look for rejection back below this low. If we get rejection back below that, we would look for a move down toward 41.37, then a bounce, and then one more push down towards 40.96 to complete the overall move. Again, I do think this C wave is extended, but it's certainly not impossible for that to play out that way. Okay, so in that case, we would count this ABC off the high as an A, B, and then C. And you can see just so much extension in this C wave that it just doesn't make a lot of sense. So it's much more likely that we're in this B wave up, and then we would look for the C wave down. So those are the three paths that we're looking at. The bulls can kind of make something out of this if they continue to push and hold the levels I said. The bears can either move directly lower or push up over 4,300 first and then move lower. Again, a break of 42.42 would be a good indication that we may be heading directly lower, as they would come down and invalidate how this C wave is set up and likely break this low as well. So 42.42 would be a level to watch. I would expect if they break that, they'll come down and break this low, and we would expect a more direct move down. Over on the NASDAQ continues to be a thorn in the side for the bears, and the reason is not that the NASDAQ can't break down and not that it won't break down. It's just that it's not following ideal paths. And so if you're counting the NASDAQ in a move down, you have to count it as a diagonal where this is 1 and 2, and then you'd have A, B, and C down. For 3, then you'd get a 4 and a 5 down to complete the overall move. The move back up into the 14,933 area, you can see they poked through it, is not ideal. They certainly haven't invalidated. They're not up in wave 1 territory. But when a wave 4 comes back over the 50% retrace of 3, it's generally a problem for the impulsive count. So they need to have an impulsive count down in this C wave, and they're not really seeing that. Does that mean they can't? No. Does that mean it can't be a diagonal? No. But it does make it less likely to play out. So it doesn't mean that the bulls are going to take control. It means that we might get a much more complex structure. It means we might get more chop and kind of a more difficult market to navigate than we already have. This market's been very difficult to navigate in general. So the NASDAQ continues to be a thorn. Another reason is it has not hit its 1.0 at 14,402. Generally, when you're looking at major selling, that's an easy number for the bears to hit just in general, and they haven't even gotten there yet. So NASDAQ is not ideal by any stretch, but overall what we would look for is, you have the A of 3, the B of 3, and then you'd look for C of 3 down here to 13,850. Then you'd look for a bounce in 4 back toward about 15,000 or so, or 14,900 or so, and then down again toward the 1764 down here at 13,292 for this wave 5. So that would be the big picture path as it's drilled in. Again, this wave 4 kind of needs to hold the high from yesterday. I said that on Monday's high, they pushed through it. I said if they did push through, 14,933 becomes huge. You can see they tagged it and came down. So they just pushed through it a little bit. Again, not the end of the world, but you certainly don't want to see that if you're looking for the downside to play out in a more direct manner. For the bulls, you'd be looking at this as a potential 1-2 here off of the low. They have a couple different options for the bulls, where this is 1 and you got a wave 2 here, and they're kind of trying to break out over the pivot just like ES. over the 15033 area, and the bulls must hold 14906. That's kind of how it works. You make a 5-wave move up towards 15366, which makes sense. It's right back to this high. That's how wave ones work. Just a quick lesson in Elliott Wave. A wave 1 comes back and tests previous resistance, usually fails to give you a wave 2. Wave 1 of 3 comes back and tests that resistance again, usually fails to give you a wave 2 of 3, and then you get a breakout after that where they break this resistance, and we look to see them push in a bigger formation. So just a quick lesson on how that works and why Elliott Wave works. When you guys say Elliott Wave is just made up, it's not. It's technical analysis in the best way you can use it, because it gives you the key levels and the understanding of the market, which is why I teach the course I do in the Elliott Wave for Beginners we'll talk about later. But in any case, the bulls need to hold yesterday's low to keep that count alive, but over the 15033 area, they need to hold 14906. The other possibility for the bulls, but I don't think it'll line up well with ES, is that they could come down here toward the 1.0, hold that area, and then go higher from there. So that 14402 area is a bullish area to hold if they can do that and create a 5-wave structure. Again, I don't love that because I don't think it lines up well with ES, but it is a possibility. Guys, if you like the information that I put out in these videos and you want real-time market updates from me and to be part of our winning day trading team, you need to check out investwithjacob.com. There's a link down in the description. Go ahead and click that link. It'll take you right over to the webpage. Once you're there, check out our membership plans area. We have 2 incredible monthly plans that both come with a 7-day free trial, because I want you to get in there. I want you to make sure you love it and become part of my trading team. Before you ever spend a penny, you can cancel at any time. We've built a community of people here that care about each other. I think you'll find it amazing to be a part of it. We all want to see each other succeed, and it's really a neat thing to be a part of. We also have our Elliott Wave for Beginners course. I am running a special on that right now that I talked about early in the intro. We have a coupon code. It's Halloween season. It's one of my favorite holidays. The coupon code is SPOOKY. SPOOKY gets you $30 off of the Elliott Wave for Beginners course. Now, if you want to do that, it is a little bit tricky sometimes to find the coupon area, so I do want to show you how to do it. You come in here to the Elliott Wave for Beginners course area, you put in your information, and down here it says have a coupon. You click on that, you type in the coupon code SPOOKY. It'll make a little bar, and then you scroll to the top, and it'll say price $37 with coupon SPOOKY, so that's how you get your $30 off. And then one more thing down here, when you click pay with credit card or pay with PayPal, you won't be able to put in your information yet. You hit the sign up button, and then after that, you can put in your credit card or PayPal details. Okay, so I just wanted to make sure you knew how to do that. The coupon code again is SPOOKY. The course itself is helping real traders understand the market in a way that finally makes sense and allows them to make money. It's hard to understand why good news makes the market go down and bad news makes the market go up. It can be confusing and frustrating, and if you really want to understand the market, you need to understand Elliott Wave Theory. It's 25 videos in 3 sections where I go over the introduction, and in the introduction, we go through your expectations, mindset and emotion, the KISS method, and why it works. We go over your chart setup and tools. Every tool you need to have on your chart, how to use it with Elliott Wave Theory, and how to know that you're seeing the tops, bottoms, and key levels you're supposed to be seeing. Then we have our Elliott Wave for Beginners section where I go through each wave. I give you its confirmation points, how they work, why they work, where they break, when they fail, what happens when they fail. I give you the corrective zigzag, the theory of alternation, corrective depth theory, the pivot, everything you want to know to finally understand the market and make money and understand what's going on. The really cool part is, if you don't want to get the course itself, I understand, but it does come for free in both monthly rooms. So if you want to become a monthly member, you automatically get the Elliott Wave for Beginners online course. In the first room, my Invest with Jacob room, you get all of my real-time market updates, all of my buy and sell alerts, all of your Elliott Wave questions answered, a midday video where I go over exactly where we are in the count and what to expect, as well as the training material you just saw. We trade the SPY and the QQQ and we swing trade, which means our trades can last anywhere from a few days to a few months, so we don't trade quite as often as a day trading room does. Now, a caveat to that, we just launched our algorithm where we have been day trading, and as you saw at the beginning of the video, the algorithm is doing incredible and we are absolutely killing the market. Now, if you do want more advanced day trading as well as individual stocks and PT's reduced risk binary method, you need to check out the Throne Room. In there, you get everything you get in the Invest with Jacob room, as well as day trading, individual stocks, and PT's reduced risk binary method that just crushes the market. He gets you in at a really cheap price and gets you huge multiples on your money, and it's how he structures his trades that's so unique. It's something you really have to see to understand. And that's another reason we give you that 7-day free trial. He also started a challenge account where he put $4,000 into an account, trading mini ES futures, showing you how to build a small account into a large retirement or savings account. Guys, we would love to have you in these rooms so we can all make money together. All right, the key takeaways for today, we are looking for the bulls to try to continue higher up here toward the 43.15 area for this B wave. And then we would look for the bears to try to take back control and push us down toward the 40.97 area to complete that wave 5. If the bulls are going to take control, they really need to push it up to at least 43.05, and then from there hold over the 42.80 level while they complete a 5-wave move higher. Over on the NASDAQ, looking for the bears to hold that yesterday's high for a wave 4 and then continue more directly lower. If that's the case, we would look for them to push down toward the 14.265 area to complete wave 3. Then a 4 and 5 down into the 13.850 area. The bulls are looking to push back over yesterday's high in that 14.933 area. If they can do that and break over 15.033 and complete a 5-wave structure while holding above 14.906, then it will look like the bulls are trying to take back control of the market, and we'll need to hold support one more time to confirm that. Guys, that is your market update for today. I will talk to you tomorrow.